Hey there. If you follow us here at Five Market Realty, you know that we do two market updates a month. One, we focus very much on the Athens area and the surrounding counties. And then later in the month, we do more of a national market update where we talk more about things that are national trends and things we expect to see. And that's what this is right here. We're going to be talking a lot about interest rates, inflation. If you have an interest in Athens area real estate or just want to be kept up to date on the market, be sure to click subscribe. You'll get notified when we have a new market update video. But today, that's what we're going to talk about. Is 2022 has been a very interesting year. We just got through some elections here in November. Georgia's still got one to go. There's a runoff. We had a little bit of good news in the inflation numbers yesterday, so the inflation was not as high. We hope that's a trend. But what we're going to talk about today is what's really the truth about home prices and interest rates and inflation, which have been the story of 2022, which has proven to be a very turbulent year in real estate. So let's go ahead and get started, and let's just ask the question: will mortgage rates keep rising? And the short answer is we think so. We don't have a crystal ball, but all indicators are pointing to that. And that's really been the story of this year is interest rates. I was talking with a client the other day, and I think they misheard me. I was trying to get across the historic thing that's happened in interest rates this year. And they sort of pushed back and said, well, interest rates have been very higher in the past, much higher in the past. Well, they were right. They're higher, but here's the difference. Look at this. That is starting the year at 3.22 and going all the way up to over 7. And we actually got a little bit of a rollback yesterday. We had a lot of mortgage brokers giving us some new numbers, came down about half a percentage point, it looked like. So that was good news. But as you can see, what we haven't seen happen before is how quickly these have gone up. That's what's going on. When it happens so abruptly and so quickly, that's what's given people a lot of fear and things that have been driving and taking people out of the real estate market, causing this the real estate market to kind of undergo this shift. Let's get into some quotes from some of the experts that we like to do. This is from the chief economist at Freddie Mac. U.S. 30-year fixed mortgage rates have increased 3.83 percentage points since the end of last year. That's the biggest year-to-date increase in rates in over 50 years. That was the point I was trying to make to that one client is it's not that they're at this all-time high. It's just how quickly and abruptly they have gone up so fast. With inflation still running at a 40-year high and the Fed expecting a few more rate increases to combat it, mortgage rates will experience upward pressure through the end of 2022. And that is from the economic research manager at Realtor.com. Let's take one more look. While mortgage rates are expected to continue to drift higher over the coming months, much of the rapid increase in rates is likely behind us. That's from Mark Fleming, the chief economist at First American. I believe that's true. You know, they've gone up so quick that while rates are likely to continue to go up, that's what we think is going to happen. They should not be at these big of a clips. And that will probably help calm our market down a little bit. And we're going to talk a little bit about that too. So recession. Let's go ahead and say the word recession. We've been talking about it for a while. It's been a little controversial. Some people have said we're not in one or that we are. But this is a Wall Street Journal economist survey. Chances of a recession in the next 12 months. January, they said 18%. There was a good chance. By June, it went up to 44%. And 63% this past October. So, you know, in my opinion, I'm no economist like these people that they're surveying, but being a real estate broker here in town and things I've seen, energy, I would predict, yes, we're in a recession. We've been in one, and it'll probably continue for a little while longer. But what does that mean? Is a recession that ugly of a word? In a lot of ways, yes. But let's take a look here. You've probably seen this slide before because we've been going through this for so long. You know, we've been talking about recession since we hit COVID. But long and short, a recession doesn't usually equal a decline in home values. As you can see here, I'll move my head slightly. 1980, they went up in 6.1%, 81, 3.5, slightly down, almost 2%, 91. 2001, they're up 6.5%. And then obviously 2008, which was very different, that recession was caused by the mortgage crisis. I worked through that time in real estate and saw things very different. I remember, you know, a lot of home supply and not a lot of activity. Now, through 2020, most recently, we also saw the home values go up. So if we're talking about a recession, what happens to interest rates in a recession? So we mentioned before that we're thinking about those rates going to tick up, but at some point, they might be coming back down, and that might be creating another market shift. So in 1980, mortgage rates went down by 4.25% in a recession, 81, 5%, 1991, just over 2. These are drops in interest rates. So what we're alluding to here is, again, don't have the crystal ball. But if these rates continue to tick up, we might be looking at a forecast at the end of 2023 or maybe into 2024 where the rates come down. And that's going to create another market where the buyers are competing with each other. That could be a future thing that we'll be talking about. Now, what are the experts saying about home prices? This is probably the biggest part of this market update I want to talk about, is really understanding what's going on with home prices, what it means versus just the headlines. So let's take a look into this real quick. Now, this is the home price forecast for various entities like NAR, Mortgage Bankers Associations, Freddie Mac, Ivy Zelman. You can see a few of them have very modest increases right here, Mortgage Bankers Association, and then Ivy Zelman has it going down about 5.1%. You average that out, it's pretty flat. That's, again, a forecast of the home prices in 2023. Now, the big banks are calling for a lot larger depreciation. You look at Goldman Sachs, that's 5 to 10%, Wells Fargo, 5.5%, Moody's, 5 to 10%, Morgan Stanley, 3%. Now, again, keep in mind, these are national numbers. I don't know that we're going to be seeing something like this in the Athens area or Watkinsville or some of our surrounding counties, because we have a very desirable area that a lot of people are still moving to. We just might see a lot more flattening out. But let's take a look. I want to dive into what that even means. Let's say these prices do go down from where they were in February or March. What does that mean? So, this is what they're forecasting in the future of 2023. Wells Fargo is saying, hey, 2023, they're going to come down, but then they're going to go back up in 24, which is sort of what I was talking about with that possible change in interest rates. I want to look at our specific area, though. Let's take a look at that. So this is a graph that I did. This is for Clark County, and I'm going to do one for Oconee next. This looks at the average home price sale from 2016 till now. Let's go back to 2016. You can look at the glory days. Look at that affordability at 192. Keep in mind that Clark County has a lot more diversity of homes, condos, so there's going to be a lower price point. But as you can see, this normal appreciation, 202, 213, 213 to 235, then to 258. So there we are. Let me take a sip of water. There we are in 2020, and that's when everything kind of went crazy, right? So we go from 258 to 315, 315 to 358, which is year to date today in November. But if the prices even do roll back a little bit, let's say they roll back a little bit, average home sale price in Clark County going down slightly, at 350, that still represents 26% above 2020. So while technically, yes, the home price did roll back a little bit, what is it relative to? So let's take a look at Oconee County. Same thing, glory days of 2016, much lower price at 320. And then as we come up in normal appreciation, in 2020, we're at 413 as your average home sale price in Oconee County. We jump up, there we are at 480 in 2021, and year to date right now we're at 588, which is surprising. But most of the homes we saw selling in Oconee were on the higher end of the home. We roll back that down in 2023 to 550. You're still 25% above 2020. So it's kind of relative when we talk about home price changing. I'm going to talk a little bit about foreclosures because that's been a narrative that people are going to add in here. There's a little bit of information there as well that, while technically it's accurate, it's really a little misleading. So let's take a look at the foreclosure activity since 2005. The last time foreclosures were over the million mark was 2015. You can see here in 2008, 2009, 10, 11, how high they were. This was the mortgage crisis. This was a different thing, very high supply, but values were plummeting quickly. And as you can see here in 2020 and 2021, the numbers are extremely low. But also, just pay attention to how much lower they are from that phase. They were also low in 2018. They were low in 2019. The reason they're so low in 2020 and 2021, obviously there's a moratorium. So it makes sense that now that foreclosures are coming back, foreclosures would be up, but up compared to what? We're talking about more like 2019 or maybe just below it versus something like we saw in 2008. Here's another quote. Anyone waiting for a huge foreclosure wave will probably be disappointed by this report. The foreclosure activity was flat Q1 to Q2, and the foreclosure stats dropped slightly from August to September. So foreclosures, while technically are up over 21 and 2020, it's really misleading. Look at this little headline that will grab your attention somewhere on social media or be an advertisement. U.S. foreclosure activity continues to increase quarterly, nearing the pre-pandemic levels. Here's your key word, pre-pandemic. We stopped having foreclosure for a while during the pandemic, so we have to return to some normalcy. A lot of people have equity in their home. They have the ability to sell. It's not the same thing, and it's a misleading statistic for you to think that foreclosures are going way, way up. Now, the other thing is inventory the week ending of October 28th. This is another thing that we are seeing increasing inventory. And by the way, that's a good thing. Home buyers need more opportunities, which we're trying to see, or finally starting to see, excuse me. But look, we are 39% ahead of the same week in 2021, just 6.3% ahead in 2020. And in the pre-pandemic year, we're still 37.2% behind. So while inventory is increasing, it's still low. We're not really in a high inventory market. And I think we'll see appreciation kind of slow and maybe probably have a normal, we might see an uptick in homes as we get into the new year, but I don't expect to see housing supply really increase over the next 2 months as we end the year. Now I'm going to end the video here. We've got a lot of things going on in the market. Our job is to keep you informed, even if you're not looking to sell, but if you are, you're going to have to get a plan. Reach out to somebody here, athensga at 5mrealty.com, info at 5M Realty. A lot of times we start working with people months before they actually start to look for homes or they look to sell their house. That's just part of our job. So we hope this information was helpful to you. We want to give you accurate information and tell you what's really going on. Be sure to click subscribe. Have a great week. And thanks for staying with us for what looks like almost 11 minutes. Have a great week.